the various sale and purchase transactions to the lender. Digital lending software platform Originate loans and is powered by SCORMAIL APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements. SCORMAIL, a leading fintech company in India, get in touch to know more.
SCORMAIL Solutions and Resurgent India Knowledge Series presents Virtual Session on Lending as a Service, the Future of Digital Loan Origination. Know your speakers. Mr. Praveen Khanna, Vice President, SCORMAIL Solutions. Praveen Khanna is an alumnus of the Indian Institute of Management, Lucknow. Praveen has rich BFSI and technology experience of more than 20 years. In his earlier role at a London-based financial services firm IHS Markit, Praveen worked in the area of new age banking platforms for global investment banks and buy-side institutions, and saw the journey from paper-based contracts to over-the-counter derivatives and syndicated lending to digital models. Mr. A. Ramesh Kumar, Founder, Chairman, and Managing Director, La Raksha Impact Finance Enterprise Private Limited. Mr. A. Ramesh Kumar has had an incredible 50-year career in finance. He is known for his expertise in areas like banking, foreign exchange, and microfinance. With degrees in both physics and management, he's made a significant impact in these fields. Notably, he served as the Chief General Manager at State Bank of India and chaired various institutions, including a housing finance company and mutual funds trustee board. Mr. Sudapalli Jaya Prasad Rao, Vice President, Viz Ergos. Sudapalli Jaya Prasad Rao has 20+ years of corporate experience, out of which 18 years of rich experience in banking and digital transformation. He has worked in product management, loan sales, customer relationship, debt collections, digital initiatives. Some of the loan products handled are business loans, secured and unsecured, mortgage loans, farm equipment loans at regional, zonal, and national level. He was instrumental in scaling the business loans in the rural and semi-urban areas during his stint with ICICI Bank. Mr. Sudeep Mandal, Startup Holic Catalyst, Founding Member, Truffle Money. Sudeep Mandal is a founder of Startup Holic Catalyst, a founding member of Truffle Money and founder of Finance Holic. He is also involved in various roles such as Fintech Advisor, Startup Mentor, and Startup Incubator, Venture Capital and many more. Sudeep has extensive experience in credit underwriting and risk management, particularly in the retail lending sector, SME secured/unsecured loans, and loan against property. Mr. Timmanagh worked with Axis Bank in retail consumer loans across all functions for nearly a decade, handling business, credit, product at regional, zonal, and national level. Prior to this, he has worked in investment banking, corporate banking, consumer loans and housing loans. Mr. Sangram Sabat, Founder and COO, Sarthi.ai. Meet the entrepreneur redefining customer communication through reliable near-human AI. Sangram Sabat, founder and COO of Sarthi.ai. With a reputation for crafting industry-leading AI solutions, Sarthi.ai is a trusted ally to 40 top financial enterprises in India. With Sarthi.ai, Sangram is helping bridge language and UI divides in critical customer communication processes like lead qualification, onboarding, and collections to maximize business outcomes, all while preserving a human touch.
Hello, and a very warm welcome to our esteemed panelists and our audience today on this contemporary session about the future of digital loan origination, lending as a service. My name is Praveen Khanna, and on behalf of ScoreMe and Resurgent India, it will be my privilege to be your host today. We are joined today by an esteemed panel of members from the banking, fintech, and financial services industry, and it will be our honor and privilege to learn from their deep domain experience. Now, before I invite the panelists, I just wanted to share some key highlights on the enormous growth of digitization in banking in India. Now, there are two positive themes that are underway, which can make this India a multi-year decade. There is investment that's happening in the physical infrastructure in terms of roads, rails, and airports. And then there is significant investment that's now happening in the digital infrastructure. Digital banking, fintech is increasingly becoming omnipresent, right from wealth management, insurance, payments, and of course, lending. The expected market for digital lending is expected to grow from 2 lakh crores to almost 8 lakh crores by 2026. India, of course, is the third largest in terms of the number of fintechs globally, and is expected to soon surpass US as well, and also has the highest adoption rate in terms of fintechs at almost 87% as compared to a global average of 64%. From the first phase of digitization in financial services via the opening of the Jan Dhan accounts, and to the second phase via UPI, we are now, I believe, in the third phase of digitization, and this is being led by digitization in lending via the loan service providers, the neobanks, the emergence of the account aggregators, and setting up of the digital banking units. India's digital lending market, which was worth almost USD 270 billion in 2022, is expected to reach USD 350 billion by the end of 2023 and 1.3 trillion in this decade, countering a 5x growth over this entire decade. There's a very interesting Equifax report on fintech lending trends in retail, which throws up some very interesting statistics. The average ticket size of the digital loans that is being dispersed is almost at 12,989. The share of small duration loans is largest at almost 88%. There are top 5 states, the Maharashtra, Karnataka, Uttar Pradesh, Telangana, and Tamil Nadu, which are now accounting for almost 50% disbursement. As per a recent Experian report, co-lending arrangements are a testimony to how innovations in fintechs are getting valued by large and traditional players. There is new age fintech players who are now getting largely focused on personal loans. And of course, buy now, pay later is an interesting subsegment. That is there's rapid evolution of regulatory framework as well. There's 40% drop in manual KYC now as compared to digital KYC. There's 85% reduction in costs with the adoption of eKYC versus a manual KYC. 40% of lending is now going to happen through digital channels by 2027. So these are very, very interesting times. There's another very interesting trend in India, which is through the millennials and the demographics. So that's a big, big advantage. And they've been very early subscribers on the digitization wave. Gen Z, which now constitutes almost 50% of India's population, is expected to be the driver on the digitization trend. 52% of India's adult population is digitally active, and therefore lending via fintechs is now standing at 36% versus the 24% from NBFCs and 22% from banks. So clearly fintechs are now leading the way. There's the mindset of the governments and the regulators, which has been very, very positive, with the plans to set up digital public infrastructure, the agriculture accelerator front. Government also has proposed 3 centers of excellence on AI in top educational institutions. Of course, there are still some challenges. There are concerns There are privacy concerns on data. There's gap on the MSME segment or new to credit customers. So out of the net 70 lakh crore exposure to MSMEs, only 16 lakh crores is via formal credit. This has been a big challenge. As per the latest standing committee finance report, MSMEs continue to face that credit gap of 20 to 25 lakh crores. So we have a very diverse panel today, and with senior members from the BFSI industry, and really looking forward to hearing their views today. First up, I'd like to invite Mr. Ramesh Kumar. Mr. Kumar has experience in various geographies, notably India and Japan, and has been the controller of global branches and subsidiary branches of State Bank of India. He has been the chief executive of business and operations of State Bank of India for Mumbai, Maharashtra, and Goa, controlling almost 2,000 branches. He's now associated with an NGO, La Raksha Social Impact Trust, and URK Animal Welfare and Charitable Trust. And he's also been the MD, CEO at an NBFC, chairman and MD at Housing Finance Company, and chairman and director at Mutual Funds Trustee Board. Mr. Kumar, it's a huge privilege to host you, sir. And just wanted to start by asking you, how do you see digitization evolving in the lending sector in this decade? How significant is the contribution of lending as a service to embedded finance? Is it likely to be a game changer from an embedded finance perspective? Over to you, sir.
Thank you, Rohan. It was a very nice, insightful introduction to the topic of the day. And I think I would like to first share, when we look across the world, there is a worldwide recessionary trend right now, and that is changing the dynamics for lenders all across the world. There is pressure on profitability. There is going to be increasing high delinquency that we would start seeing compared to the last few years. There would be higher credit utilization because of the appetite that is being generated. And it is in this context, we'll have to see what lenders have to do. Lenders have to really adapt and rise to these uncertain times. They have to make changes, and digitization is the way out for this adaptation. And India is standing at the threshold of innovations and revolutions based on digitization. You narrated some of those, and especially in the area of public goods utilization, the digitization has been phenomenal, and it has caught the attention of the entire world. And in the private sector also, the digitization has been growing by leaps and bounds. We have seen lenders and banks in particular really increasing the scope and the capabilities of their core banking systems very significantly. But at the same time, there has been an explosion of new innovations in the digital area through various fintech players who have come up with various platforms or apps to really reach out to the underserved and unserved segments of the country. And in this saga of revolutions which is happening, I think SaaS plays lending as a service, that plays a very important part. What is lending as a service? It is really relatively a new concept in the world of finance and technology. It is a platform that enables the lenders to offer a fully integrated end-to-end borrowing experience to their customers without significant investment in resources, which is required to build their own platform. This would lead to delight of customers and earn more revenue at a lower cost. Maybe the cost reduction has been estimated at around 30 to 35%. And lower time to market, which becomes very important in today's competitive world, where it is estimated that use of a LAS or a lending as a service partner against building or buying your own technology and platform for reaching out to the customer, the time to market can be reduced by 40%. That is a study which has been done in this area. And what is happening is people have started trusting their cell phones very significantly. And the trust that they place in their cell phones say, social media platforms, that is now being increasingly applied to lending. And that is what makes this lending as a service a very powerful innovation. By implementing this, not only are they able to reach out to hitherto unreached customers, but they are also able to gather more wide ranging information on the customers, which add to the dimensions of the credit appraisal that they do, because they come up with different kinds of information. It may be about the rental behavior of a customer. It may be about the public utility payment behavior of a customer. So many other dimensions are added to the traditional scoring behavior. So this is a big enabler for predicting the future behavior of a customer much better than the traditional banking behavior systems have been providing. So in this part, the lending as a service comes in as an embedded service, as an embedded finance. I think that plays a very significant part, because it is just one part of the embedded financial solution in everyday experience. Here, the finance is being embedded in the everyday experience, whether it is a BNPL, which Rohan talked about. See, the customer at the point of checkout of a purchase is able to get the finance for that purchase completed in a matter of a few clicks and maybe a minute. So that is the power of creating a new experience for the client by embedding the finance in a normal customer shopping experience. There is another area that I have, we are actually working with a potential fintech partner, where we are going to provide the loans for customers who are going to go into hospitals, where they have a Mediclaim policy, but notwithstanding that, either the facility is cashless facility is not available, or they go at odd times of the day or night when they have to pay up the money. So that is a situation where most people find themselves in. Here, if there is an embedded finance available along with your insurance, I think that would be a very powerful combination, and it would completely change the customer experience. And that is something that we find we would be able to provide along with the support of a fintech partner. There is another fintech partner who has come from US, who are trying to create a complete new ecosystem for freelancers and solo entrepreneurs. These are people who have been farming out on their own. They are not treated as businesses by the banking and lending system. They are only treated more like personal borrowers, if at all they borrow money. They are trying to create businesses, tackle the various challenges of a business. So they are creating an ecosystem where a solo entrepreneur, it is like a combination of the power of LinkedIn plus Twitter plus Facebook plus web broadcasting plus chat rooms plus training and finance. That kind of an ecosystem, an embedded ecosystem, I think is going to completely transform the scene for such a segment of borrowers. So not only are we discovering, with the help of loan as a service, new segments of clients, but also creating entirely new experiences for customers. I think these are going to create great changes for the customers. And lastly, on this point, I would say, because the loan as a service brings more dimensions to embedded finance. That is why it is a game changer. Loan origination as a service is the more commonly appreciated service. But underwriting as a service, due diligence and risk management as a service, portfolio monitoring and defaults management as a service, loan servicing as a service, all these new services are all built together in the loan as a service platform. And that is what makes it more powerful and a game changer for embedded finance.
Perfect, perfect. Thank you so much, sir. Very, very important points made by you, sir. I think some key highlights from my perspective, the cost element, the cost reduction that you rightly pointed out, the time to market, the reduction and 40% more efficiency in time to market, then use of alternative data. That is going to be a big game changer, especially for new to credit customers. I mean, that's going to be a big area for new to credit customers. Then new segments and new experiences, especially the medical example that you took. And I'm sure the solo entrepreneurs bit, I'm sure Mr. Sudeep will have a lot to say about that as well, given his experience in the VC world. So thank you so much, sir. And I will come back to you with more questions, sir, subsequently.
Thank you. Thank you.
I'd like to now invite Mr. Rao. Mr. Rao has more than 20 plus years of corporate experience, out of which 18 years of rich experience in banking and digital transformation. He has worked in product management, loan sales, customer relationships, debt collections, and digital initiatives, and across different segments, business loans, mortgage loans, farm loans. So Mr. Rao, I'd like to ask you around the adoption of advanced technologies, say the use of AI and blockchain. How is it integral to LAS? And what challenges might these technologies bring in, along with the benefits in enhancing the lending experience?
Okay. Thank you. Thanks a lot, Praveen, for the introduction. Of course, I would like to even thank Mr. Ramesh Kumar for that, setting the tone for today's panel discussion. So, yes, during the discussion, Mr. Ramesh Kumar has pointed out a couple of benefits of the LAS, like how it is important in terms of faster go-to market and all. Before getting into the advantages or what challenges AI and blockchain can bring in the adoption of LAS, I would just like to highlight upon what has been the growth in terms of the digital lending, or in terms of the lending as such, the credit landscape in the last 2 years. If you look at the growth in terms of the total origination, the total loans that got sourced in financial year 21 itself, it was close to 1,587 lakh accounts. This I'm talking more from the assets point of view, means the loans point of view. This is, vis-a-vis what it was in financial year 20, there has been a growth of almost close to 58%. Of course, one reason is that this was the first year after COVID, a lot of sourcing has moved to the digital, so that is where this growth has happened. But however, it did not, the origination using these platforms like LAS and all, it didn't stop only at financial year 21, but it continued its growth. If you look at financial year 22, this has gone up to 2,310 lakh kind of an accounts and all. So that is again around close to 38% in terms of rise in the digital lending and all. What sounds a bit interesting is that while there has been a growth, the LAS platforms have helped in increasing the lending as such, or sourcing of the borrowers, both for the banks and the NBFCs and all. The NBFCs have been major beneficiaries. They have been very quick in adopting these platforms for sourcing of loans. And also, another important factor was that there has been always this, in the hindsight, people had this inhibition that whether is this the right way of sourcing the loans? Is it these, sourcing loans using this digital platform, this, LAS platforms, as is the right way? How about the credit worthiness of the borrowers? Are the right type of loans getting sold? Would they, the book per se, the total loan book that got sourced through these platforms, would it remain intact, or is it that there is a high possibility? Is there any possibility of this slipping into NPA? But if you look at the numbers, I was just seeing these numbers. It it was surprising to see that the delinquency levels which were there in the last 3 years, be it in home loans, it was on an average. If I had to look at the early buckets delinquencies, that is where you decide whether the book has quickly moved into a delinquency and all. On home loan front, it was on an average was in the range of around 1.9 to 2% during financial year till 2019 and all. Even between financial year 20, 21 and 22, it remained in the range of around 2.1 to 2.6%. So there has not been a phenomenal increase in the delinquency. Though on the lending front, it has been very high in terms of the digital sourcing. Likewise, in the personal loans also, the average delinquency in the early buckets was in the range of around 1.6, going up to maximum of 2.2%. So that's just a mere 0.6% kind of an increase. Consumer durables, on the other hand, was slightly different. We have seen the delinquencies which were in the range of 2.2, 2.5% during financial year 20, before financial 20. In fact, it has come down to a mere 1%, to be precise, from 0.9%. Likewise, with the auto loans, two-wheeler loans, which were at 3.3% and 5%, and business loans, which were the major users of this last platform, most of the fintech companies were using for giving for business loans. The delinquency levels also were from the range of 2.5 to 2.7% during 2019-20. It has gone up only to 3.3%. So there has not been much increase. The inference what I'm trying to draw from here is that the platforms as such for loan origination has been very, very successful. Okay, not only from the sourcing point of view, but also ensuring that the book quality was intact. So that itself is a testimony that this last platform has been successful. But however, as things are evolving, there is a need to move on or to adopt things like technologies like AI and blockchain increasingly, with a lot of data now getting moving into the blockchain. So it is becoming imperative for these platforms that they should get them. They should have these features incorporated in their platforms like AI and blockchain. However, while they pose some benefits in terms of faster access to credit for the be it individual borrowers or the MSMEs and all, but however, there are a couple of challenges which they might have to look at overcoming. One such challenge would be the regulatory compliance. Now, you know very well that the regulatory compliance in any country, be it like the most advanced countries or be it conservative countries like India, it has always been they have been a bit skeptical whenever any new technology gets adopted, whether how far it is safe from the point of the borrower's interest and all, and also from the point of the safeguarding the overall book quality. So regulatory compliances, adopting to regulatory compliances would be a challenge because the AI and blockchain are slightly on advancement. So regulatory compliances might not be that advanced. So adopting them would be this regulatory compliance hurdle has to be overcome. Then again, the one major challenge which keeps coming up or keeps cropping up, we might have seen it in most of the platforms or in most of the conferences or symposiums that has come up, is that data privacy. How is it that the platforms have been very quick? Platforms like Glass and all have been very quick in terms of using data from various sources for faster processing of loans, but are they ensuring that enough data privacy and security of that data is being managed? That is again one big challenge which the platforms have to ensure that they have got enough controls in place so that the data privacy of the borrowers and the data security is being managed. The other thing is that, see, sometimes the artificial intelligence, they tend to be biased because they are based on some algorithms. They keep certain data based on certain behavioral pattern, and as per that they keep interpreting the data. So it could be that the AIs that the AI stack which the platform might have built probably might have got fine-tuned or got tuned to certain kind of assessment and all. So which might not be correct always. So it could be biased towards certain kind of bias. So it will be requiring that the enough checks are being done, the kind of AI stack they are using, whether it is being adaptive for different kind of borrowers, and whether it is using that particular data clearly, the algorithms clearly in interpreting a borrower's credit worthiness and all. Same is another important aspect. What we have also seen during our course at WiserGoes is that integration with legacy systems. Most of the the financial organizations or institutions in the BFSI sector have their own legacy systems. They're not gone for updating them over a period of time. They are very happy, comfortable because the users have been using that. But however, if you have to use things like AI and blockchain, integrating with these legacy systems, whether the legacy system has those kinds of APIs where it can get integrated with these platforms using AI and blockchain, so that they respond to the queries that are being raised during the course of credit processing of the proposals. So it becomes a bit challenge, one of the challenges in terms of adopting AI and blockchain when the organizations in the BFSI sector are using legacy systems. The other factor is that there is a cost element involved in it, because none of these AI and blockchains, none of these services come at a nominal price. Okay, so now these are, since we are at a very advanced, at the initial stages, these are become sometimes costly. Now this will add to per cost per borrower, loan processing. So how is it that this is one challenge the platforms have to look at, whether they will be able to offset this increase in the cost while ensuring the delivery of the loans to the customers in a faster manner and all. And the other important aspect is that there is a lack of standardization. Some of the blockchain spaces, they lack standardized protocols and all. They do not have a standardized frameworks and all. So it is making sometimes challenging for the platforms in terms of the interoperability between different blockchain networks and all. So this is again one more aspects that will pose as a challenge for using AI and blockchain in lending platforms. The other important challenge, or the challenge which we foresee, is in terms of the operational risks. There will be many operational risks in terms of system failures or vulnerabilities, because every new technology comes with its own vulnerabilities. It will have some bugs that needs to be addressed, and some issues in terms of the protecting from various kinds of viruses and all. So how safe or how secure these AI and blockchains would be if the last platforms if they have to adopt for the faster processing. So these are a couple of challenges which the platforms have to face when they are adopting the AI and blockchain. While they carry their advantages, but these are the challenges which they need to overcome. But as rightly said, the last platforms per se have made an immense progress. Within 3 years of span, the emergence of last platforms starting from 2019-20, if I say it has come up in a big way. And where we are in the last 3 years, they have grown. They have ensured faster access of credit to the borrowers, and even MSMEs. Today, MSMEs have multiple options because of the last platforms. So yes, last platforms are here to stay, and they are becoming inevitable. Adopting AI and blockchain also will become inevitable to make services faster. But some of the challenges, which, as I mentioned, needs to be addressed by the last platforms going forward.
Perfect. Thank you. Thank you so much, Mr. Rao. You've highlighted several of the risks. And I think the one major risk that you've clearly identified is the risk of exclusion, right? I mean, even when we use AI, and I know we are all for automation, but the risk of exclusion of genuine borrowers, how is that AI algorithm actually performing? I think that can. So are these, just a clarification, are these numbers at an overall level on the delinquency level? Or were they just specific to digital channels?
These are for the overall level, but we took it from the. I was just looking at from the early buckets, means where the early pool, the loans which are freshly disbursed, which have moved into the delinquency.
So even if AI and automation has happened, the delinquency levels have still remained stable.
Yeah, it remains stable. That is one very happy news, because normally there will be some loopholes will be there, or borrowers try to take some advantages or here and there, but that has never happened. And the systems, the last platform, they have been able to build foolproof platforms to ensure that the quality of origination has been intact, and it has been matched up to what it used to be from in the traditional banking.
Perfect, perfect. I think there's that old saying, in data we trust. So I think if the delinquency levels have remained stable, then if there are any naysayers on AI and use of technology and use of last platforms, I think this data clearly proves that there is the efficiency improvement, and obviously the delinquency still remains very, very stable. Well, thank you. Thank you so much for sharing your views, sir. And I will come back to you with more questions as well, sir.
Yeah.
Thank you. Thank you. I now want to invite Mr. Sudeep Mondal. Sudeep is the founder of Startup Holic Catalyst and is also a founder member of Trueful Money. He's involved in various roles as a fintech advisor, as a startup mentor, and a startup incubator, and also supports various venture capital funds. Sudeep, I just wanted to ask you, for consumers, what are the key advantages of accessing loans via LAS platforms compared to traditional banking channels? Sudeep, over to you. Sudeep, I think you'll have to unmute yourself.
Yeah, hi, Mr. Khanna. I'm privileged to be here amongst the all senior banking veterans. And so I think we have already had the facts and figures. So in terms of customer advancement and the kind of access that customer have nowadays is kind of very on another level. If we compare the kind of facilities that customer has as a lending as a platform, it is totally different from what we had before COVID. So now I think as an new to credit customers, previously it was an Herculean task to get a loan from any of the banks or NBFCs. But now many of the very much who are focused on the very much the short-term personal loan kind of a stuff, which is so lenders are not very much focused on what exactly the fund would be used post the disbursal. So that is where I think customer has an advantage of getting an instant kind of a loan, like platform like Five, which was previously early salary, and the Cashy, which is disbursed around 10,000 crore of cumulative loans across the past 2.5 years. So this kind of platform are actually helping the new set of customers, the millennials and the Gen Z customers, to get an instant loan that might be used for different set of end use. Might somebody is struggling to pay off the month rent, and that is being kind of an. So this is the advancement that has we have seen in the lending space over the past couple of years. And on the most promising aspect that we have seen the way of very easy to onboard customers. Like we just forward an UTM link via through an DSA channel or maybe kind of DST ecosystem, and customer can be onboarded within a span of maybe 2 and 3 minutes. And simultaneously, after an instant kind of an underwriting, customer is getting a loan maybe up to 50,000 or 1 lakh within a span of 1.5 hours. So that is the kind of change that we have seen in the ecosystem. And whereas the user, the UI and UX ecosystem is concerned, I think every fintech and other players in the ecosystem is specifically focusing on kind of very simplified journey so that customer doesn't run away. Because we have seen over the years that Indian customer has become an impatient in terms of the time that they will be devoting towards that particular platform. If they are not feeling comfortable, they will not think twice to try it on another platform, maybe from Google Play Store or maybe whatever accessibility they have instantly. So that is one of the major changes that has happened. And in terms of the advantages that customer has right now is the easy to access to credit and the kind of option that are available out in the market. So they are not dependent on banks anymore. If banks are not giving out them loan and kind of a pre-approved offer, then customer are quite happy to maybe on a higher interest rate, but they are happy to get an instant kind of a finance as per their requirement. So that is the major change that I have personally witnessed because I've been on ground for the past couple of months. And the source of the loan origination system, we might have different set of platform, but ultimately this has also a lot to do with the kind of ecosystem that are running at the ground level. Maybe we call them the connector ecosystem, or maybe we call the DSA ecosystem. says they are still the pioneer in terms of the smaller size of the loan, despite the presence of so many large platforms. We have
Perfect. Perfect.
seen, yeah. So you have seen a customer sitting at maybe Vivendi, and he is connected with a DSA at maybe at Vasai. So you just have to just pass it, you just pick up your phone, you just pass it on your data, the Aadhaar card, PAN card, and within a span of few minutes, you might have a kind of 3 to 4 pre-approval loan application from the lenders. So that is the beauty of the digital lending platform. Then again, on the more cautious side, we have seen customer civil also get spoiled by some of the ecosystem partners. I'll not name the ecosystem that we all know, like one customer itself doesn't aware that there are many inquiries where actually doesn't exist in the ecosystem, but still are reflecting in the CIBIL score. And that is ultimately reflecting in the overall conversion ratio in terms of the, if the number of files that has been logged in around 100, but the conversion ratio has been 20 to 25%. And some of the lenders that are even below 20%. But there's a specific reason for that, because number of unnecessary inquiries has been on the increasing over the years, and over the past few years, I would say, because of the recklessness of the ecosystem partners, that customer is not, even customer doesn't know that he has kind of 7 to 8 inquiries in the past 3.5 months. I think that is a kind of a red flags in terms of digital lending is concerned. Even some of the very brightest of and very disciplined customer might missing out on the good credit facilities going forward.
Perfect. Perfect. Thank you, sir. I think the two big highlights from my perspective, I think the democratization in access to credit. I think you were alluding to that through the development of new apps and the channels and the importance of user experience. I think if it's a bad user experience, people have choice now, and the shifting from one app to the other becomes very, very seamless. Thank you so much, sir, for sharing your views. I'll come back to you with more questions, sir. At this point, I'd like to invite Mr. Timmana Gowda. Timmana is, of course, a mortgage and retail banker with more than 20 years of experience, specialized in consumer loans. He has worked with Axis Bank in retail consumer loans across all functions. And of course, now heads a fintech called What's Loan. So Timmana, a question to you in terms of scalability and growth. What challenges do LAS providers currently face, especially challenges around the agri-lending space?
Yeah, see, primarily, we have been seeing the bank bazaar, paisa bazaars of the world who try to take the market to the lenders. That's you. If you put, say, 100 leads, how many will get through? About 2 to 5%, right? Now the time has come. LAS will presuppose that you can take bank to the borrower. We were trying to take the borrower to the bank. Last 10, 15 years has been spent on that. There has not been a good success because these are all Western models. They are not Indian models. Today, when you talk about 2012, KYC happened. Today, KYC is not good enough. That you always try to be disappointed when you go to the bank to show your KYC and pass through the first level of check, right? And it is the same with the poor last level illiterate, semi-literate person to digitally savvy customer. Whatever is happening is very little of digital lending. That is about 12,000, 13,000 average ticket size. When you come to the medium and large ticket sizes, call it as a car loan, two-wheeler loan, or a home loan, it still has a lot of friction, right? So what we have been building from the lender side, though we are working with the lender, as a practitioner, I can tell you, we have been working with the lender. There is a core banking system, loan management systems, and a loan origination system already in place. They're not going to replace them. You cannot rip and replace them. You have to co-work with them. How do you create a one digital layer outside of that existing? They've already dunked in about 100, 300 crores on that system. Let's talk about the big banks. And they're not going to replace that next 3-5 years. We will get that choice when they replace next time. But we are not going to get all of that. Like they have an extension of core banking to LMS, LMS to LOS. Now, what we have been doing, what are the LAS, loan as a service, as a SaaS model, is a low cost and no fixed cost system where you will be able to deploy in, say, about 3 months to 6 months time on premises or less than 1 to 3 months on cloud, and you are just a pay-per-use model. If you can bring down the cost of origination, it is not just a LOS, it is a loan operating system today. Think of a Android and iOS. It has to handle origination, validation, decisioning, digital documentation, and hand it over to the LMS as account opening and account management and receivable management collection system, right? So this is what is going to be the LAS, loan as a service. If you talk about BAS, it is too complex, but if you pick up this lending system, LAS has to handle that. In that space, interestingly, a lot of things have happened post the digital KCC guidelines of RBI, and we've been encouraged, and a lot of us have been encouraged to build for the banks, and we built for Gramina banks and public sector banks. And imagine we brought down a lending to a farmer from say 8 to 12 weeks, and some of the states report 6 months to give a Kisan credit card delivery. We brought it down to 3 minutes to 10 minutes real time. And RBI has looked at this process, approved. I'm taking an exact live case, and we can deliver up to 1.6 lakh, which is called non-mortgageable hypothecation only limit. And this has got tons of complexities. You have to access land records, you have to work with the state governments, you have to send out hypothecation charge, you have to ask them to confirm instantly and pick that call back into your system and identify the crop. You have to use the scale of finance by NABARD. This has happened, and this is presented as one of the frictionless agri credit by RBI Innovation Hub. There are multiple companies which have done. We are one of them. It's done for dairy, it is done for crop. If it has happened to agri, the last level, because Kisan credit card impacts 70% of the total 20 lakh crore lending in the country. And there are about 120 million PM Kisan credit card farmers sitting out there waiting for this loan. And banks have only achieved 60-70% of that. And central government is calling out, saturate this population who are living on my money, get them out of this benefit and get them to be independent, And followed by affordable housing. You have to go to the numbers. When you talk about Bharat, you have to talk about numbers. And it's not a very small ticket size. These ticket sizes are 1 lakh average ticket size for Kisan credit card, about 8 to 10 lakhs for affordable housing. Car loans, that 5-6 lakhs, and two-wheeler loan will be 50,000 rupees. Everywhere, customer wants the convenience on his mobile. Other than the person, the mobile is the person here. If you can put it on mobile, and if you put it on mobile, make it as, okay, we are moving away from KYC to KYS. KYC is know your customer. It is a it's a negative approach to customer. What if you do a KYS? Know yourself. Bring your own identity, which is already curated. We can put it on blockchain and build this up. Then why are you applying? You should not applying. We are going from selling a loan product, selling a service or a product, loan product, buying the needs of the customer. I think Ramesh Kumar spoke about BNPL, checkout options and all that. This is not selling a loan product, it is a buying the need product. But what is the next level? We have to go to the engagement model. You cannot just wait for a loan to default and then say, there's in delinquency, I have to go and recover money. What are we doing with the customer? Engaging with him. Why is he defaulting? Why is a farmer defaulting? Can we help him on the output side? Can we help him to stock the goods to get better price? Are we topping up a loan? There is something called Tatkal Kisan limit of 50,000. Can we give it on in 10 minutes, when he wants it? Or can we give it in 1 day delivery? These are the things which will embed finance, engage with the customer, buy the needs of the customer. I'm just talking about lending here, but you can take it to the whole BFSI space. I'm just saying the KYC is moving to KYS, and selling a loan product is moving to buying the loan needs of the customer, engaging with the customer. And with this, I think LAS is a fantastic way to, it's a platform approach. It's not a service or a product approach. It's a micro modular cloud-based platform approach. A lot of these pieces can be pre-built and delivered in say 30 days to 100 days to even a big bank like SBI. I know all of you, including ScoreMe, is playing this game, and we are all into it, and we have been successfully delivering a lot of these in MSME, consumer, and agri. That's my take on, what is a LAS. It used to be like, a service. It moved into a product. Now you cannot sell a product, and you are not Newgen or a Nucleus to sell a product. You have to have a very flexible, micro modular, customizable system to become a LAS. Is the definition of LAS is a micro modular cloud-based system. That's my take on the LAS.
Perfect, Timana. I love that line that instead of borrowers going to the bank, we need to take the bank to the borrowers. I think that's what an embedded finance, a platform centric approach can truly be transformational in. So thank you for sharing those views, Timana, and I will of course come back to you. I now want to introduce Mr. Sangram Sabat. He is the founder and CEO of Sarthi.ai. He's an entrepreneur redefining customer communication through reliable near human AI. He's the founder at Sarthi.ai with a reputation for crafting leading industry AI-based solutions. So Mr. Sangram, could you share your thoughts on a sophisticated AI ML-based underwriting and credit system that enables real-time credit decisions? Sangram, over to you.
Sure. Thank you so much, Rohan. Thank you so much for having me on this esteemed panel, and a very warm welcome and good afternoon to everyone. I think a lot of great points have already been put forth by the panel, and there is tremendous improvement in the way access to credit has been extended to even the most underserved sections of society. But then there are a lot of fringe users that we need to reach. But there has been dramatic improvement in that, and as you mentioned in the initial part during the introduction, KYC's effect, the impact, of digital KYCs and the frictionless process. We with that, with other initiatives like OCN, with the account aggregator framework, and actually, building the guide rails over the past few years, have been able to tap into the infrastructure and the architectural layer. If you think of the entire landscape, from a technological perspective, so we have been able to have breakthroughs in the infra layer, because of which today we are able to give loans to new users of credit, the NTC customers, instantly. For various small ticket personal loans and various BNPL microcredit use cases, and that part has been solved. But then there is a large part which has largely remained untouched, and which has been touched upon by a lot of the speakers on the panel, is how do you engage with them, how do you gauge the behavior of your customers, how do you control what they are spending on the credit that you've given them, what are they spending it on, and the repayment of it. Because let's face it, like, the lending growth is great, but the ecosystem is only going to be sustainable if we don't have things like over leveraging, we don't have high NPAs, and every lending business is actually a collections business, right? So from the point when the customer has been onboarded, I think the most important point after that is the approval process. And once we are done with the approval, how does the customer behave throughout the loan life cycle, throughout their life cycle, including the repayments of debts, the closure of loans, whether they are taking on further loans. For example, we have various examples in our business, right? So we are serving like 40 of the top 100 financial enterprises in India, then that has helped us, reach about 1.5 crore end users in India who are across the socio-economic strata, right? And that's really heartening to see the kind of users who are getting access to credit these days, and how the ecosystem has opened up to them. And we have like 40% of users within our 1.5 crore unique user base who are NTC, who are new to credit, right? 40%, that's a large number. So that's why the behaviors that we have observed there tell us that, for having a system that, is almost invisible and instant, right? So for example, the system that Mr. Timanna just pointed out, where it's not that, the borrower is going to the bank, but everything is embedded in the activities that they are doing throughout their daily life, right? So digitally, whether they're accessing healthcare, whether they are paying their phone bills, whether they are paying their electricity bills, whatever it is, whether they are fixing their auto rickshaw or they are buying an auto rickshaw, there are use cases are plenty, right? So, the approval process, if it becomes like extremely instant, like if it's like a 1 second, 2 second kind of a process, because we have all the secure blockchain layers, we have, GPU processing units, which are processing tremendous amounts of data in real time. And we have, varied data streams that are coming to us, right? So, I think, again, Mr. Ramesh had talked about a lot of different data streams that we are getting from, e-commerce activities, from their social media, and maybe their, past credit history, if they are, getting some credit. But because we were faced with the challenge of, 40% new to credit users, we had to find ways in which we, start observing the behavioral pattern of their payments, start observing their personal profile parameters like income, etc. But more importantly, things that are generally, not seen, like, what are they saying, right? Whenever they're talking to our, so we basically, for these, NBFCs, fintechs, we were the creators of the market, who basically gave a human like AI, which can double up as a telecaller, which can substitute a telecaller, which can substitute a contact center agent, who constantly follows up on phone, on WhatsApp, on various other channels, gives them offers like partial payment negotiations. So basically, it's like you have to take various real-time decisions, right? So for example, should I give this customer a late fee waiver offer if they are delaying the payment, or should I counsel them, or should I do a partial payment negotiation with them? What should I do at this point? So this is like the real time, not just credit, but real time collections that is happening, right? So on call. So you have to be extremely aware of the situation and the persona of the user, to ensure there is no bias, and you give them the most effective repayment method, so that there is, higher collection rates, higher payment rates, and still ensuring that, you are not doing bias and you're not using any coercive methods, right, which are frowned upon, obviously, which should be. So I think the exact area that I want to point out is that the vision that, Mr. Timanna was, elaborating on is possible, is achievable, and for that, the approval and the real time credit and collections, those two things, they need to behave like a lending loan operating system, which is controlled, which is supervised by humans, but which is operated through AI, right? And which is operated through multilingual AI. One of the other challenges that this new to credit users face is that a lot of people are coming from, the agricultural background. They are in villages, right, where you don't speak, for example, in a language that you would speak, let's say in Bombay, where you are, using Hindi and Marathi together. You will be using a pure Marathi when you are talking to a farmer. So, but today we are at a stage where, at least like, before various companies in AI started attacking this problem, we were at a situation where we were able to localize our apps. But these guys, they are not able to understand the icons that are there. They are not able to understand some of the terms that we are using. हम लोग account बोलने की, like we are accustomed to saying account. Many people are accustomed to saying khata, right? So there are multiple things that you have to, see that there are nuances, and you have to not just localize your app, but localize, or, kind of localize and humanize your communication with the end users, with the borrowers, so that they're aware what is happening with them, right? Most of the farmers, most of the new users of credit, because of the language barriers, because of awareness barriers, they may be posing themselves to significant risks, which have been highlighted by the panel, right? And which, even if you include them, you are burning them, right? So you have to be really, really careful that, how this inclusion is actually holistic and not just, surface level, right? So, and this is something that we have to ensure. This is something that technological startups, AI, deep tech, players in the ecosystem have to ensure. I think a lot of push has been given by the government, by various fintechs, NBFCs, and the DLAI, the various players in the ecosystem. And now it's really the age of AI, and that also comes with its risks. But the age of AI and digital, first startups that are enabling the last, that are enabling the larger loan operating system. I would say that, the collections and loan operating system, right? The whole holistic thing, to drive the industry forward. And again, like touching upon that, see, we are fortunate that we have a user base of that has diversity in it. Many players, they may start with a user base that is, let's say, village centric, or let's say, tier 1 city centric, and there could occur biases because of professions. Because you haven't seen that profession in your data, you won't be able to understand, whether what real-time decision should I make on this. And if we give agency to AI without a curated data set, that is going to create havoc, and that is going to, essentially do more harm to the lender as well as to the borrower than any good, right? So those are a few points that I wanted to highlight. And apart from that, I would say the ecosystem is generally, structuring up itself in a manner that we are able to, use this growth to ensure that consumption happens at a large scale, and we move towards being a greater global economy. And lending is definitely a big tool in that. There are many experts who have necessarily told us that over the years, household savings have generally been similar, whereas the amount of loans that people are taking today sometimes exceed that, right? And this is the trend that is happening, and it may be detrimental to some economies, but the age and day in which we are in, and the awakening of India on a larger level, I think if we entertain the regulatory interventions of RBI, actually support that, we will be able to build a sustainable ecosystem that can have the last players, that can have the core, I think the 3 core layers that were spoken about. I don't necessarily see them changing, right? I see them getting more efficient over time. But we all building a ecosystem, a sustainable ecosystem around it, which kind of holds every player in the ecosystem accountable, and which is all tracked and operated through a digital framework, which is powered by AI, that is multilingual, that is catered to the needs of the different borrowers that are there in India, right? So I think that is what I would love to say. And if there are any questions around it, I'd love to answer them.
Perfect. Thank you. Thank you so much for sharing your views, Sangram. And I totally respect the diversity of India. That is the big point that you've really brought out. I'm conscious of time. Maybe some closing thoughts. Quick closing thoughts from everyone. I know we've had a diverse range of experiences and subjects that we've covered in the discussion today. Starting with you, Mr. Rao. Any closing thoughts from your end?
Yeah. Thanks, Praveen. So basically, as we have discussed, most of the panelists have also told that, see, LAS is definitely going to be an alternative to the traditional lending. So there is no doubt about it. And increasingly, like even our colleague Timana Gowda has said, if you have to take bank to the customer, then there is no other better way than to use LAS platforms, because these are the platforms which will help borrowers to get loans in few minutes. And these are the platforms which are have the capabilities and abilities to leverage the data and the technologies that are available to assess the loans, and also as accurately as possible using algorithms and decision models, so that the customer gets the right kind of credit from the right type of credit at the right time, to a right financial institution and all. A lot of times, people thought that LAS would only enable in faster go-to-market, but my view is that more than faster go to market, it will help in doing an accurate lending, okay, to an accurate borrower, thereby avoiding or minimizing all kinds of errors which usually happens in a normal kind of a lending method which we follow. These are my thoughts. So LaaS platforms are today are able to integrate with multiple platforms. They have the ability, so they are here to stay. So this is the best way. They are not competing, but rather they are trying to complement the services which earlier various type of platforms are trying to ensure that they provide quicker access of credit to the borrowers in different locations. Yeah.
Perfect. Thank you, Mr. Rao. Tamanna, closing thoughts from your end?
Yeah, so LaaS is particularly moving. Okay, lending as a service, we have to change the word to loan as a service. If you talk about lending, it is a provider terminology. If it is a loan, it's a consumer terminology. We have done with the lending, building for the lender, building for the banks and all that. Now we have to build for the consumer. You have to build for the channels. How do you meet him? Physical, digital, on the mobile, voice bot, chat bots. Where are you meeting him? So LaaS is, it was like SaaS. SaaS was, was Bahu. Now it's going to be Sasuma. It is going to be everything. It's going to be the big boss of the place. So it will be consumed by the lenders for the consumers. Build for the lender, for the consumers. Get closer to the borrower, consumer. If you don't get closer to the borrower, you are lost. Don't build for the. Okay, you just tell the banks, tell me what to do, don't tell me how to do. I mean, what to do is their requirement, regulatory requirement, their risk appetite and all that. How to do is the end point. How do you open it up to the consumer? So we are moving from what to do to how to do, and from a lender to borrower. That's my quick closing.
Perfect. Thank you. Mr. Sudeep, closing thoughts from your end?
So, that definitely LaaS is going to be the future for sure. There's no doubt about that. Everybody has spoken enough about what the store for the future. But whereas I think I'll just touch based on a small point that in the recent GFA, Mr. Shaktikanta Das has clearly said that it's better that fintech formulate its own regulatory body, not regulatory, but its own body to basically what exactly, and be transparent with each other, with the ecosystem partners, with the customers, with the regulators and all those stuff. I think we might see some of this happening in the coming years for sure. And I think on the other part, lending is easy, but again, collection is a tough task for everyone. I think giving credit to the right people is important, and with the kind of technology advancement that is taking place, and also with the increased influence of account aggregator coming up, and with this, I think with the recent the data bill that we had, which has got implemented, I think the way you will be using the data going forward, I think that will be the key, and misinterpretation of data has to be restricted at anyhow, and also the customer education on various aspects like better utilization of the loan taken, and better utilization of reaching out to the customer to minimize the legal cost of the particular lender. I think physical approach, or maybe the entire digital approach, which has been like a platform like Redgenix and all those stuff are doing fabulously well. I think that is the way forward. Both then, as Tamanna sir has rightly said, that is not lending as a service, but is a loan as a service. We have to build for the consumer, and ultimately we have to serve the consumer. The market is huge, it's for everyone, but execution will be the key for everyone. Yeah, that will.
Perfect. Thank you. Sangram, any closing lines from your end?
Well, yeah, echoing the sentiments of Mr. Tamanna that, we are right now in the day and age when we have to build for the customer, and the customer today has, a lot of different faces because we are reaching the fringe users. That is the kind of reach that we are starting to get. Very positive about the ecosystem, and on a very, a process level, I think the future process would be, the KYC is within a minute. Approvals are a minute-based approvals, where a lot of these use cases that are, within apps, like, there are healthcare use cases where you need some kind of an emergency credit. It could happen that you are getting the approval while you are, going for the emergency, right? And you already have a minute-based KYC and onboarding system, and you have got the proper amount, the precise amount of loan tailored to your needs, and the lender also has more control about how the spend is happening, right? For example, right now in many food ordering apps, you have simple, so you can't use the simple money for anything else than the Swiggy, right? So there could be multiple e-commerce related, health services, etc., that would embed this into their apps. So this will ensure that the loan is availed instantly at the time the customer needs, tailored to their needs, right? And once that happens, the collection system kicks in. And even like before that, there is a small layer there where, because we are dealing with customers that may not be that aware financially and contextually about how to use that credit, how to repay that credit, it's a responsibility of the ecosystem to ensure that the audience that they are catering to is aware of how much loans they can get, what they need to do with it, how they need to repay, what are the different strategies, so that they don't fall prey to unethical practices and the adoption doesn't take a hit. I think apart from that, security is a big concern that has to be taken care of. Bias is a big concern. Ethics of use of technology and AI is a big concern. And I think regulatory bodies need to be industry, not just supported, but industry driven. And there could be a future where since AI itself is a big topic and it has to be regulated, so there could be intersecting, bodies that are AI into domain regulator into a larger regulator, basically, that is sitting on top of operating system, which is which is an abstraction over the traditional core banking, etc., systems. And this could help us build something that is sustainable and that has long-term trust. So that would be my closing.
Thank you. Thank you. Last word to you, sir. Ramesh sir. Ramesh sir, over to you, sir. Concluding thoughts from your end, sir. Sir, you'll have to just unmute yourself, sir.
Yeah, thank you, Praveen. Yeah, Timanna and Sangram also mentioned about the factor of convenience to customers. Just to place it in perspective, according to a recent World Payments report, 91% of the consumers said that convenience is the key factor in their decision to use a digital lending platform. So how important that is I think very, very clear. A recent study by Capgemini Research Institute for Financial Services also says 89% of small and medium businesses surveyed feel that they are underserved, and 72% say banks have ineffective credit and collection services. So you can see the huge gap and the positioning for the loan as a service providers to be more to move in, because the field is ripe. Now, what I would probably talk a few more points on this. As Jayaprasad Rao mentioned about legacy system issues and blockchain and how the compatibility and integration could happen. I think here, at least for one set of probably software platforms, the new focus of the India stack on OCEN, standardized APIs, I think could make a world of difference in standardizing the connectivity between banks and lenders and the fintech providers if all of them adopt this common standard platform. So that would ensure that any fintech player, any last provider would be able to connect with any of the large players without too much of a problem about the nature of their system and the integration factors which would come into play. The other point is, as more digitization happens, credit bureaus have to become more perfect in their data collection and data management, because a lot of these approvals are primarily depending on a credit score factor. And if that is defective, if the data is incomplete, if wrong overdues are shown when they are not there, it would be very unfair to the customers at large and would really create a major distortion in the growth of the digital lending system. Also, as more and more decisioning happens in the split second, split minute kind of a thing, with pre-fixed parameters and algorithms, psychometry also, I think, will start to play a bigger role, at least in the larger ticket loans of this kind, where some psychometric tests could get integrated into the last platforms to be able to really take care of the propensity to pay right away, because there is very little personal contact with the customer. Also, as banks, and with the recent regulation by the regulators, laying the ground rules for the partnership between banks and lenders and the fintech players, I think a clear roadmap has been established. And once the fintech service providers follow these norms, and the banks and lenders take the full responsibility for the fintech platforms that they are partnering with, for the transparency, for the data privacy, for the for its truthfulness, then it would become much easier for the banks and the fintech players to partner together. And in the process, what may happen is large legacy systems of banks, very complex legacy systems, may get replaced with simpler loan management systems, which just takes care of the loan book management only, while the loan origination and the operation is completely taken care of on these outsourced fintech platforms, thus bringing down both the costs and the convenience for the banks. If this trend happens, I think banks would be more amenable to adopt that. Another point that I would like to make is, for this system and partnership to get more credibility, there may need to be a new kind of a rating mechanism for at least the safety rating of the last players and the fintech platforms, so that on that part, both the customers and the regulators are assured that the safety factor of the data, of the processes and the customers' privacy, all these things are to a certain expected standard. If that happens, such platforms and fintech players, I think, would be able to find it much easier to integrate and get the partnership with the larger banks and other institutions. If all of these, and the one more point, we were talking about whether it should be called lending as a service or a loan as a service or this thing, or maybe we should start hereafter calling it only as loan as a platform service only, because simple apps alone may not be able to get much of partnerships with the bigger lenders. It may have to be necessarily platform services. So that could be another development which could happen. And if all these new regulations and the standards are set up and some of these factors are taken care of, I think this lending as a service or as a platform service could simply become the lending industry for small and medium enterprises and all individual borrowers. So if this happens and there is no escape really from going towards this, then I think we would be really seeing phenomenal efficiency, phenomenal reduction in costs, and really great volumes and contributions to the economic growth of India.
Perfect, perfect. I think there can be no better way to end this session today, sir. We've had a very, very interesting discussion, some really interesting ideas. I mean, use of psychometric tests and behavioral elements while analyzing the credit eligibility. I'm sure there are startups that are tuned in and are actively listening to these new ideas and would love to implement these at some day. I guess my one big last takeaway, I mean, we have a new acronym in town. I mean, LAS, from lending, it is now loan as a service, and perhaps loan as a platform as a service. So I want to thank you all for this really, really enthralling discussion today, sir. And until next time, it's bye-bye for now. Thank you. Thank you so much to everyone.
Thank you.
Thank you.
Thank
Thank
you.
you.
Thank you.
Bye-bye.
Thanks, everyone. Bye-bye.
Thank you, everyone.
Thank you. Bye.
Hi, Mr. Ramesh.
Hi, how are you?
I'm doing good. How are you?
Yeah, I'm good. I'm good. We met in that fintech conference. After that, we have not been in
Yeah.
touch. Yeah.
So I guess we should catch up. I'll drop my number on the chat.
Yeah,
And
please do that.
if you could, then I'll love to catch up anytime that suits you and discuss.
Let us do that. Yeah, we are also looking at, going forward with some additions and strengthening of our IT platform for the future. And your chatbot demos and all were very attractive and very interesting for us. So we would like to see what are the possibilities there. Though we are again really a startup with a small player to start with, but yeah.
Definitely.
But,
And
it should be interesting.
your points really hit long, and they were really powerful. So and many a times visionary that you have seen that in front of you, envisioned it in front of you. So love to meet in person and discuss whatever ideas.
Yeah, it will be a pleasure.
Right. So
Pleasure.
Pleasure,
All the
pleasure.
best. All
Thank
the
you so
best. Good
much.
luck. Good luck. Good luck.